All right, welcome back to Stock Tricks with Nick. I've got an interview today with James Gillen. He's the founder of StockChartArt and SCA Trades. He's been trading full-time for 3 years, and he's got a hybrid trading style between position trading and swing trading with a base in Slim. He's also been featured in the book Trade Like a Monk by Harneet Singh, and you can find him on Twitter at Casualty War, which shows his name as StockChartArt. Thank you for taking the time to meet with me and to go over some of the trading topics that we'll be covering today. So we will be going over a bunch of charts along with breaking down the indexes and some past trades that he's had. But first, let's just jump into how you got into trading to begin with.
I had a friend, and he actually is the one that got me into investing. He was more of a buy and hold style investor. And I could kind of remember to like 10 years back when like he initially got me started, he would like show me his portfolio on like TD Ameritrade. And I was just kind of like fascinated at the fact of what compounding interest could really do. And at the time he had actually owned Tesla. And I believe the price might've been in the single digits at that time, 10 years ago. If
adjusted for splits, for sure.
Yeah, if I'm not wrong. So I could only imagine, what it is right now. And I just kind of started out. I think, I didn't listen to him and buy the stocks that he recommended that I buy. And I kind of like went off my own. I think some of my first stock purchases were like USO, and some other like pretty junky stocks that I should have never been involved in the first place. And I just didn't have the patience, and like 2 months, like the stocks didn't really do anything. So then I thought it would be a good idea to start day trading because, I saw all these people, posting these flashy gains, making, 100%, 200% in a day. And who doesn't want to make money like that?
Right.
But, like looks could be deceiving. And, like when I really got into that, like that day trading, scalping style of trading, I just, I lost, maybe like 50%, 60% of my account in a couple of weeks over the course of a month. I had absolutely no idea what I was doing. And instead of like getting like depressed and like wallowing in my despair, it just like really like motivated me and like fired me up to be like, I'm never gonna allow this to happen again. And I'm going to do whatever I need in order to succeed and become profitable and successful in trading. And that's like when I like really like buckled down and when it was like a real like turning point for me. But I really started trading, 3 years ago, full time. I had got laid off at my job. I was working as a executive assistant to a commercial real estate company. I also had my real estate license at the time. I was, selling houses as well. And I just had like a lot of time on my hands, and, like I was still, like watching the market, but from afar. And, I saw that all these, stocks were just like getting absolutely decimated, taking like 50%, 60%, 70% drops. And, like I was paying close attention to it. And that's when I started to like really actively get involved again in active trading. Like every single night I would just like study technical analysis. Like I would, study charts, I would study chart patterns, I would study candlestick patterns. I would watch videos of traders that had more experience and that I looked up to and whose like style of trading I wanted for my own. And I would just watch their videos every single day. Like I would read books. Like I put the effort in and I did the homework on a daily basis, just to have like a solid foundation in technical analysis and understand when I look at a chart of what I was seeing. Because like the way I look at a chart now compared to 3 years ago, it's completely different.
So what were some of the like key resources? You said you followed traders that you looked up to, you read some trading books. Can you give some examples of those resources that traders that are going through significant drawdowns right now could learn from?
everybody that is in my subscription service, like I recommend to everybody that they read How to Make Money in Stocks. For me, that's the foundation of what my style trading is really like initiated around and built upon. Just really focusing on the strongest fundamental stocks from the top industries. Like I use a really like bottom up approach in trading. Like I'm looking for the strongest stocks from the strongest industries, stocks that are in a strong uptrend at the time, stocks that are at or near their all-time highs, stocks that have accelerating EPS, accelerating sales, stocks with strong comp ratings, stocks with strong RS ratings, stocks where the number of funds are growing from quarter to quarter, and
Everything that William O'Neill teach.
Yeah,
taught.
yeah, exactly. And really just kind of standing back and waiting for these stocks to come out of consolidations and to come out of bases on volume. And it sounds simple, like at the end of the day, like it boils down to, like trading the best quality stocks and buying these stocks as they're pushing out on volume out of consolidations and out of bases. But there's a large psychological aspect to trading that we all need to conquer. And that takes time, and it takes dedication, and it takes screen time. And it's not something that can be taught in a book.
Like you said, you went through a couple very, very significant drawdowns in your portfolio, 50%, 60%. That's probably something that we're seeing right now, where the market at what the market's doing. I know March of 2021, a lot of the growth stocks took their initial sharp declines. And in 2020, everyone was a professional trader. Everyone was making great money. We were in strong uptrends, incredible liquidity in the market. But now traders are kind of understanding that the buy the dip mentality without any additional risk management isn't a sustainable strategy. Yeah, it's great for making money, but trading is about keeping that money that you make too.
Like it's unfortunate right now. We've been blessed with this bull market for a very long time, where you could basically buy the dip and you'll be rewarded. But it looks like that reign is coming to an end right now. Other investors on Twitter too, like doing like the same exact thing, and they're adding to these positions. And I think they're going to have to learn the hard way, unfortunately, of not really exercising risk management and just using a buy and hold strategy, because all bull runs eventually come to an end, and this could definitely be the end of one. It could be a painful strategy, but at the end of the day, it's like the losses that refine us. Like it either makes us or breaks us to become
Right.
better traders.
Yep.
And it's like one of those like industries where like the top 10% of traders are the ones that are profitable and the ones that make all the money, just like a lot of other markets, like the real estate market, like real estate agents, like the top 10% of real estate agents are the ones that make money and that make all the sale, and the other 90%, basically do nothing. And trading is another one of those industries where, you want to be one of the people in the top percent. And, risk management is like the number one, like cornerstone of trading. And if you're not using risk management, you're gonna get crushed eventually. Like it might work the first time, it might work the second time, it might work the third time, but eventually, if you keep repeating those mistakes, they're gonna catch you.
When you're going through a trading slump, what are some things that you do to kind of manage your own risk, your own personal risk? So maybe the market's still fine, but maybe personally you're trading kind of poorly. How do you scale back there?
Yeah, I'm always a big believer in progressive exposure, and that basically means that if you have positions that are working, you add on more exposure, you increase your exposure, you get more aggressive. when positions aren't working and when positions are failing and when you're constantly getting stopped out, that's a signal that you need to reduce your exposure, scale back, or completely go to cash. So I find that personally the best thing to do is just to either scale down, use smaller position sizes, take gains quicker, just to psychologically like lock in a winner and lock in a winning trade. But the best thing to do is just to like scale down on position sizing, use tighter stop losses, and just like shoot for singles, like rather than go for doubles, triples, home runs. Just try to get like a winning trade or two under your belt, just to get that confidence back that lost when things aren't working in your favor.
I don't know if you keep your trading statistics, but just like keeping a pulse on how your last 5 or last 10 trades have been going, that gives you the feedback to either say like, you're trading poorly, the market's not working, or just your style is kind of out of favor. And a lot of what inexperienced traders will do is try to revenge trade, get those losses back right away, or switch styles, have that style drift. So instead of the style drift, what would you say is kind of, what's a better use of your time instead of drifting styles? Try to find like a different way to trade.
Yeah, well, I have no problem like sitting on the sideline for weeks or even months at a time. I'm not going to impose my will, and I'm not going to impose my style of trading onto the market. I'm going to wait until the market conditions are suitable and in my favor, and that they, what's the word that I'm looking for? That they work together with my trading strategy in order to like get aggressive and in order to like really increase my exposure and put my foot on the pedal again, because otherwise you're just going to get chopped up and you're going to get, death by 1,000 cuts.
Right.
And you're just going to get chopped to pieces, little by little, by getting stopped out and stopped out and stopped out and stopped out. And you're going to get frustrated and try to revenge trade. You can't impose your will onto the market. It's like there's no way around it. Like you gotta have patience. You have to wait till the market conditions are favorable to your style of trading. And there's nothing wrong with that. There's nothing wrong with sitting on your hands for weeks or for months at a time until conditions are favorable again. Like at the end of the day, like trading boils down to like probability and odds. And if the odds aren't in your favor, why, you need to ask yourself, like, why do you want to be involved?
So I think we've covered a bunch of good topics here. Let's bring up the charts and then go through kind of what you're seeing in this market right now and go over some of your past trades before the market really started to correct here. All right, let's start with the QQQs. Walk us through what we're looking at right now.
Yeah, so I just wanted to like kind of like zoom out and look at the Qs from a monthly view. And like the last real bear market that we had was in 2008, when we were in a correction for more than a year's time. So since 2008 all the way to 2022 up until now, the market hasn't corrected more than a couple of months. So we haven't really had a true bear market since 2008. That's like one of my big concerns right now. We have a nice large head and shoulders pattern that's been forming for over the last year. And we're just starting to break through the neckline of that pattern. And if you look over here, you can kind of see as price finished coming down the right side of the head and shoulder pattern, you can really see the selling volume start to expand and start to pick up steam. And we finally, we're cracking through that neckline today. You could see how the selling pressure, picked up into the second session of the day. If you use a measured move, which is the depth of the neckline, which is the depth between the top of the head and the neckline of the pattern. That would put us at about a 20% drawdown from where we are right now, which would put us in line to prices that we last seen in around June, July of 2020. And this is something I actually pointed out a couple of weeks ago, that there has been a major character change in the mega cap tech stocks. So if you look at Amazon, for example, on the weekly, price has found support at the 10-week or the 40-week moving averages. And even if it fell through it, it was just temporary and it came right back through. And we're just really pushing through these moving averages on really high volume. And that hasn't happened. That we had closed before the 10-week, and the 40-week was during the COVID crash. A lot of mega cap stocks like this, where the 10-week and the 40-week acted as support for the stock, it's now starting to act as resistance rather than support. And Amazon isn't the only one. If you pull up, so I was kind of like showing over here that all these areas, either the 10-week or the 40-week, were supporting price, and then it's finally starting to act as resistance to price.
And they're starting to roll over. The moving averages themselves are now turning down.
Yeah, the moving averages are starting to turn down as well. So like same here with Google. Going back to 2020, this was the COVID crash over here where we closed below. And this entire run, we basically found support at the 10, it rode the 10-week on the weekly, the entire run up. We had two temporary pullbacks over here to the 40-week where we found support. And then, price finally broke through below over here. And then as price starts to try to push back up into the moving averages, it was clearly rejected. And now it appears that we're starting to enter, stage 4 declines on these mega cap stocks. And, these type of stocks are the stocks that really hold up the entire indexes. It's very concerning. Arch is a coal company. They're a top 10 industry. Do you want me to pull up the marketsman charts or just go into the
No, just mentioning coal is one of the strongest groups in the market. This was one of the strongest stocks in that group. So you narrowed your focus based on those two things.
Yeah, exactly. So the stock is it's a top 10 industry stock. It's one of the top rated stocks from its industry. We had a really nice bullish pattern forming. We also have the volume drying up while price consolidates in the pattern. Yeah, so we had a really nice large volume shelf forming around price within the pattern. We broke out of this pattern on above average volume. I don't know what the volume run rate was for that particular day, but we took quick profit into the stock. I think my last piece I sold out around 21%, 22%. I used very tight risk for the position. I think I risked 2% on the position. I went a little bit larger than I usually do. When I am taking less than 2% risk on a position, I'm going to size up a little bit larger, and I'm going to take profit more quickly than I usually would, because I just want to lock in that initial profit, just to assure that I'm profitable on the trade. And then as price moved up for the 1, 2, 3, 4 days, I took profit along the way, and I think I actually sold on this candle over here, or maybe this one. I sold my last quarter.
Another one, or another group that you were trading, was oil and gas names. Did you want to bring up either OXY or OKE. I think those were two that you traded there.
So yeah, so Oxy had a really nice high and tight flag forming. In order for a high and tight flag to form, you have to have 100% move in price in under 2 months. The stock consolidates between 2 to 5 weeks, and the depth of that base is no greater than 20%. So we kind of had a really nice high tight flag forming. I'm not sure if I got it on this breakout candle or this one, but either way, I got stopped out on the trade. It was a small loss. I think I took a 3% loss on the trade. Price is now back within the bottom of that flag. It's below both moving averages. The 21 EMA is like starting to turn down, which is a little bit concerning, but I still like the overall setup. It's on my watch list right now. I don't have that many stocks right now that are like on my really on my top tier focus list. I have maybe 5 names right now, but the trade just didn't work out. Another trade that I took recently that didn't work out was ATI. Yeah, right over here, ATI. I got in, we had a nice flat base setup. We had a nice large volume shelf forming around price. If you look at the breakout bar that day, we had really nice above average volume. It looks close to about 100%. Maybe it's a little bit lower, like 80%, 85% times the daily volume. But, I had a really nice breakout bar, looked really promising, but, I got stopped out, I think, over here on this bar over here. So the trade just didn't work out. I didn't take a loss on it. This was just a break-even trade. So that happens some of the times, and at the end of the day, trading is just kind of like getting your feelers out and getting your fingers like into a couple of stocks and seeing what sticks, what doesn't stick. But you want to take as minimal losses as possible. So like 2 of the trades of my trades that didn't work recently, Oxy was one of them. I took a 3% loss on the position, and I don't mean a 3% loss of my total account. I mean a 3% loss of the position size. ATI was a break-even trade. I probably sold for a couple of cents more than I bought the position, so it was like technically profitable, but I just count that as a free trade. I think BTU was one of the other trades that I took recently too. BTU is another coal play. Initial cup breakout over here. We had really skyscraper volume bars coming in, and then we just kind of consolidated for a couple of weeks, and then I got in on this breakout. I believe that the volume was above average volume that day. I think the first day I sized up larger than I usually do. I went about double size the position that I usually take. I used a really tight stop loss, 2%. I probably sold 1/3 on the first day. I probably sold my other third over here, and then I sold my other third up here somewhere.
So look at how much probability he stacked in his favor. He was looking for a strong stock in a strong group that had tightened up. Volume was doing exactly what he was looking for. And it was basically an A+ setup in a C- type market. So when he had the gains there, he was scaling out immediately, making the trade profitable, and then protecting his risk on the trade. So he can take trades like this over and over again, because one trade like this, where you get 20% out, that's going to pay for 10 trades of 3% losses, 2% losses, stuff like that. So really wanted to emphasize that even with everything that you stacked in your favor, if you were stubborn for 3 more days, it would have been a losing trade.
This isn't the kind of market where you're going to get home runs. You might be in one of those stocks that maybe has a 40%, 50% run, but the odds of that
Count yourself
happening
lucky.
are absolutely like slim to none. And if you get in that kind of like routine where you're trying to do that, you're gonna give back your gains over and over and over again. I'm kind of like looking at this market as a market to refine my skills and to sharpen my tools. So when we get that next market that I'm looking for, where I could really get aggressive again, I'm just better than I ever was, and I'm ready to eat it alive and squeeze as much out of it as I possibly can.
So thanks for breaking down those charts. One last question that I have for you is, if you were to have a conversation with yourself, maybe 3 years or 5 years in the past, what are some things that you would have told yourself to really speed up your learning process to get you where you are today?
I would just tell myself to, really educate myself properly. I would tell myself to read a lot of like the trading books that I would recommend right now, such as How to Make Money in Stocks, Life Cycle Trades, Remnants of a Stock Operator, Mark Minervini's books, where like his main principle is like the VCPs, and just really dig in and educate yourself and get a solid foundation, and understand what risk management is and position sizing, and having a general understanding of technical analysis, and being able to read a chart, because all of these things like really take time.
Mm-hmm.
And it's not just something that you could learn in one day. It takes a lot of screen time and just trading on a day-to-day basis. And I would just tell people that there's no reason to like invest all of the money that you have. Take a portion of money that you're comfortable with, and just use very small position sizes. Use proper risk management, and just develop and build a style that is profitable and that works before you put your life savings into a trading account.
All right, I think we're going to end the interview there. Thank you so much for taking the time to jump on my channel. James also has his own YouTube channel, StockChartArt, and you can also follow him on Twitter. He's at Casualty War, which shows up as StockChartArt, and he has his own trading group and website there as well. So make sure you give him a follow on Twitter. And if you guys enjoyed the video, please leave a like, subscribe to my channel. I make trading videos like this and breakout watch lists on Sunday. All right, have a great rest of your day, and I'll see you guys in the next video.